All right, what's going on? We are discussing making sense of crypto and the future of money. This is part two. It's going to be much shorter. This is going to be the simple thesis that I have for business owners. Of course, it's going to be much more complex as we dig in, but I wanted to give you the broad strokes concept. And so last conversation, if you watched that video, we discussed how everybody needs to figure out what vehicle to store their capital in to send it to themselves through space and time for the future. And there's many different vehicles that you can choose. My thesis is that crypto, and many people's thesis is that crypto is a new asset class and vehicle that you can choose with 10x to 100x benefits to some of the other vehicles that you can choose. But this conversation, I want to focus specifically on business owners and why they should be thinking about cryptocurrency and the future of money. So the agenda is just me talking through this one bet to place on the future. Disclaimers, of course, this is not financial advice. It's purely for entertainment and learning purposes only. Everybody is in a different situation. Do your own research, calibrate according to your own risk profile. My question is, how can you hedge the risk of starting and running a business? It is very difficult to run a business, start a business. You know that. There's competition. You run out of funding, fires happen, 9 out of 10 businesses fail. It is extremely difficult to start and run a company. And I believe we're in a unique time where you can hedge that risk by plugging a portion of your treasury into this crypto asset network that is currently growing. So there's a tale of two futures. There is this crypto asset economy that is rapidly growing through a network effect that we discussed in the last conversation. And there's the bet that you're making on your business. And my proposition or my thesis that I'm doing myself that I think other people could start to consider as an idea, of course, do your own research. And if you have more questions, please ask and really think long and hard about this before doing it. But my simple thesis is that businesses that use their dollar cash flow to acquire BTC, accumulate a portion of their treasury in a crypto asset, are able to place two bets with one business, hedging the risk of starting and running a company. And so if you can use the cash flow to start to begin acquiring these crypto assets while also reinvesting in your cash flow and then reinvesting the cash flow that grows from that reinvestment in the business back into a treasury of Bitcoin and Ethereum, you now have the bet that you're placing on building a cash flow positive, profitable business while also having the bet that you can make on a technological network effect by building a substantial treasury in Bitcoin or other cryptocurrencies. And what this does is it allows you to place yourself on this expanding network effect that's been happening. I use Bubble as a positive here. You put your business onto a growing network. So you put your business online because you knew it would help you with sales. You put your business on social media because you knew it would help you get the word out about your business. And these technologies, they fundamentally change what our businesses are. And so we know that we needed to get involved with the internet. We know we need to get involved with social media. We know we need to get involved in mobile. The question is, it's very difficult at this stage where we are today. In the future, it's going to change, to understand how to get involved with this Bitcoin and crypto economy. And because it is an internet of value, because it's a money network, the simplest way to get involved is through simply acquiring it through capital. And so my premise is this: the Bitcoin acquisition. You'd buy a business, you'd acquire talent, you'd purchase some new technology or tool that's going to allow you to grow your company, the business that you run, the business that you're trying to grow. So why not acquire an open technology that is expanding in its ROI that's for everybody? And so what we're seeing is big companies, a few big companies, Square, Tesla, MicroStrategy, acquiring Bitcoin and putting it on their balance sheet. We're seeing investment firms acquiring Bitcoin and holding it. And my hope is that individual business owners, many of whom have already done this, are going to begin to acquire Bitcoin on behalf of their business so that they can get the advantages essentially of this growing network effect for their business and for their income. And so that's the big idea. And it's fairly profound when you start to think about what if the world was beginning to be priced in an internet native currency? If you start to ask the question, what if you look at the world priced in BTC, not priced in dollar terms? And so it is this open money standard, this internet native network, a money for the internet, you could say, that anyone can transact on. And what's already beginning to happen, what I think could happen further in the future, is that the digital goods of value that we buy online could be priced in BTC, could be priced in Ether. And that means in the metaverse, in VR, and the digital goods you want, in the things you want to acquire, it's a different system of value that you begin to price things in, almost like the metric system. It's like a different system to work with. And that matters because prices fluctuate greatly between the crypto economy and the fiat dollar economy. And so owning a chunk of this valuable asset that is the way things could be priced in the future is also a huge benefit to start thinking about. And you might have seen NFTs and art. Those are already being priced in Ethereum. And so if you're somebody who has, 1,000 Ethereum and that painting costs 1 Ethereum, you might buy it. Well, that painting might cost $2,000, but you're not thinking in those dollar terms exactly. And that's something also to consider. Now, there's risks, of course. There's investment risk, which is just you're acquiring this technology. Is the risk going to pay off? Just like it would be for acquiring any other business or investing in any other company. There's time scale and liquidity risk, meaning if you need the money immediately, there's some, because of the fluctuations in price in Bitcoin, which we can discuss, short term, there might be some liquidity risk to the time scale that you're on. But there's also another risk, which is what if other companies begin to acquire BTC? What if other people begin to acquire BTC? What if their balance sheet begins to expand, almost like storing your capital in a bank account where your interest is 20% or 60% or 100% a year? Suddenly, the people who get onto this expanding crypto economy are moving forward a lot faster because their dollar terms treasury is rapidly expanding. And then as they take their cash flow and they put it back into acquiring more treasury and that treasury expands, suddenly you have this machine working that's pulling you away. If your business is here and other people's businesses is not on the crypto economy, it's possible that there could be a widening gap between companies that store a portion of their capital in a crypto asset and the companies that don't. So that is another risk I think people need to think about. And I think these companies like Square and Tesla, I'll just give you one last stat to leave you with, and I should probably be providing more examples and stats here, but Tesla put, I believe it was $1.5 billion into Bitcoin for their balance sheet. And because of the moment that they got in, which was earlier this year, that doubled. So, they went from, whether I forget if it was 750 or 1.5, but either way, they went from, let's say it was $1 billion on the balance sheet. Now they have $2 billion in Bitcoin on their balance sheet. So 100% return. The first thing to note about what's happening with that is that was more income for the business. That expansion of their balance sheet was more income for their business than all of the cars sold in the previous year. So their balance sheet expanded. This growth expanded quicker than an entire year of working very hard to build and sell cars. The second thing to note is that Tesla now has another $1 billion on their balance sheet in capital expenditure to acquire other companies. So they have a $1 billion advantage when it comes to what they could spend on acquiring new technologies. And so that is the power or potential of this crypto economy and plugging into it early. Now, where I'm going to leave it is there's a lot more detail here. I just want to give you the high-level idea. There's many things to consider. There's many risks to consider. There's potentially simple actions to take, but I would urge you to understand a lot more about this before you dive in, and I'd be happy to be there to answer questions if you join one of my live sessions. But I wanted to make you aware of a bet that companies are currently making. This is not new. The companies are already doing this, private and public. People are already doing this, private and public. People are getting on this crypto economy as it expands. And if this thesis, follows true, my hope is that you can take advantage of this growth as well, so that you can grow your treasury, have more opportunity for capital expenditure, place two bets. Have both your business could fail entirely, but if your treasury expands appropriately, it could potentially support you. So there's many things to consider here, and hopefully this was helpful. And let me know what your questions are. Thanks.